Hey traders, Adam here from Bullogic. Going to do the question of the week with you this week. This week we're going to talk about stops. And we're not going to really discuss on where to set your stops. That's going to be a whole nother video, a whole good topic that we have in store. So expect that soon. This one's just going to be about setting hard stops. We get lots of questions, and I see lots of questions by traders, asking, do you set a hard stop? Do you use a mental stop? What do you do? So I'm going to talk about setting hard stops, setting mental stops, the pros and cons of both, and I'm going to tell you what I do and how I use it. Now, if you don't know, a hard stop is a stop that you actually set an order for. So you're into this stock, and it's going or whatever, and you go in there and you put a stop loss. You put your stop order in. If it comes down 30 cents, I want out. I'm done. Well, if you put a stop in, that is a hard stop. That way you can walk away from the computer. You can do whatever you want, and that stop is going to remain there. And if it falls to that level, it'll take you out. The other way people do it is a mental stop. That way they know, okay, if it drops 30 cents, I'm going to go over here, I'm going to click the flatten button or the close button, and I'm going to sell my shares if it drops 30 cents. But they got to be watching it, and they got to know if it's going to happen. So there is no actual order already in. They just do it from seeing it happen, and then they're going to close it out. And I guess there's also not having a stop altogether, but I'm not even going to touch that one. I wouldn't recommend just letting your positions run wild or. So getting back to hard stop. So myself, I like to set a hard stop. 90% of the time, I will set a hard stop. Now, I'm going to go in, as soon as I buy into the position, I'm going to set my stop. Now, the 10% that I don't is because it's a day trade, and it's as soon as I bought it, the stock is taken off, and I'm already scaling out. The trade is just that fast that it's already making me money, and I just don't have time to set a hard stop. Otherwise, I'd actually go in there and set a hard stop. So I like hard stops. Now, people who don't use hard stops, they usually fall into two categories. First, they think that if they set a hard stop, big market makers and big high frequency trading computers are going to be able to see their stop, and they're going to take them out of that stop just because. Now, I tell you, I really wouldn't worry too much about that. I've been trading for a long time, and I never really worry about that. Yeah, market makers can see your orders. Other traders can see orders on level 2, level 3, level 4, however many levels there are. Yes, they can see your orders. Try not to put your orders at like whole numbers. That way, there's not a whole bunch of them there. Try to keep your order small and where it's supposed to be, not just like at a whole number. And then just don't worry about it. A lot of people blame these market makers. Oh, market maker took me out of there. Otherwise, it would have been a good trade. Well, let me tell you, if the stock came down and stopped you out, it wasn't a good trade. Just admit to the loss and move on to the next trade, because blaming it on a market maker is not going to do anything. Obviously, the trade wasn't good. It didn't work out for you. And just move on. You should have your risk calculated. You should have a certain risk. Make sure you watch our risk reward video if you don't know what we're talking about. So you should have your risk calculated, and you should be okay taking a loss on that position, for that amount of money, because it's already set in your mind. Okay, I'm willing to lose 1% of my portfolio, but it's okay. I'm looking to gain 2% of my portfolio. So, people who care about market makers gunning for their stops, I'm sorry, just no. And two, people usually are afraid that it's going to come down, the stock is going to come down, take out their stop, and bounce up and run off without them. Yeah, this happens every time. Everybody can tell you a story of how it came down to the penny, touched their stop, took them out, and then it just bounced up and did exactly what they thought it would do. But they weren't in it because they got stopped out, and if they didn't have that stop in there, then they would be in profits instead of a loss. Again, you really need to focus on the bigger picture here. If you get stopped out, then there's a reason that happened. You don't need to be in the trade anymore. Maybe your stop was too tight. Maybe it wasn't in the right place. Go back and analyze where you put your stop. Make sure you put it in the right place. Was the trade right? Yes, if it was, then hey, get back in. Once you get stopped out, if this trade starts working, get back in. I get in the trades all the time. I'll get stopped out in the morning. I'm like, oh, it's because I gunned it a little too early today. I didn't really wait for the setup, but now it's starting to set up, so I'm gonna put my order back in. I'm gonna get back in. You know what? It works out for me 9 times out of 10. So just because you get stopped out doesn't mean you can't get back in. So if you get stopped out and it bounces, hey, whatever, just wait for the setup to happen. and get back in. You're losing some commissions. You probably make your money back and you probably make the commissions back. Not that big of a deal. So I always recommend setting a hard stop. Now I know I'm doing this on video and I don't really have anything to show you about hard stops or not, but I just wanted to point out Google. Google pre-released their earnings during the middle of the day 3 days ago, as you can see with this big red candle. Now, what if I was long here on this break? You know, I think it's going to break the 20-day moving average. I think this thing's going to run up into the close because they had earnings that day. You know, and I'm like, okay, I'm good to go. I got my mental stop, and I want it out here at that 736 level. And now I'm going to go to the bathroom, or I'm going to go downstairs, make myself something to lunch, and the trade's working fine. And then I step back and just boom, right? Trade sunk. Google was down over 10%. They got halted that day. You know, you just don't need that with a mental stop. It's just, if you had a hard stop in, you would have been taken out here, you know, and then you could have laughed at all the other people that are getting killed over here or, you know, whatever, but at least you would have taken your small calculated 1% loss and then you could have moved on with your day. So that's why I like hard stops. I like to set hard stops because I don't have to worry about that position. I set my stop where I know my risk, and then I can move on. I can start looking for other trades. I don't have to sit there and babysit that position. You know, I got 3 27-inch monitors. You know, I have no problem putting that stock on another screen so I can watch it, but I'm not going to sit there and babysit it. I like to keep an eye on it because I want to know when it's starting to run up so I can start to scale out. You know, I don't have to worry about the stops because I got my stop in there. And I can go look for other positions and other sets I want to trade. I don't have to constantly look at that one and make sure it's not ticking. Another reason I like hard stops is because with mental stops, you have a lot of danger of really getting in your mind and messing it up. And see, it's going to start to sell off, and you're going to start thinking, oh, it's okay. It's selling off too hard. It's going to bounce here. It needs to bounce. You know, it's okay. I'm not going to take a loss. It's going to come back. You know, and that is wrong thinking. You don't need to think like that because that is exactly how you blow up your portfolio. You know, yeah, maybe this one bounces, but the next one's going to be like Google, and it's going to tank. And you're just going to be like, oh no, and the loss is going to get better, and worse, and then it's going to be, oh, maybe I need to take my loss here. No, it's going to come back. It's down too much. It's going to come back. And then boom, it keeps going down because the market always does what you don't want it to do and what you don't expect it to do. So if you have a hard stop in there, you don't have to think about it. You don't have to be like, oh, should I take profits here? Oh, it's not working out here. You know, set your hard stop in and let it do the work for you. If you want to get out a little bit early, then fine. You know, if it justifies it, like a failed breakout is on, you know, you see a failed breakout and you need to get out a little bit early because you just don't think it's going to go, then get out early. But at least you had your hard stop in there for your last line of protection. So not everybody shares the same enthusiasm about hard stops as I do. And that's okay because you can move into mental stops, but I recommend that you are a day trader, so you are sitting in front of your computer the whole time. That way you're able to watch your positions, even though I think it's going to distract you because you're going to have to watch all these other positions instead of focusing on finding the next big move. But hey, that's okay. As long as you are a good day trader, which means you're consistent, you got your rules, you're disciplined, you stick to it, then you can set mental stops for yourself because then at least I know that you know what you're doing. So you're prepared, you're consistent, you're disciplined, you know when to take your loss, your emotions aren't messing with your brain, and you can actually get in and get out and watch your positions pretty easily. If you're a new trader, I highly recommend you set hard stops. If you are a trader that is not in front of the computer all the time, set hard stops. If you're walking away to a meeting, walking away to lunch, getting on the phone, whatever, set some hard stops just in case as your last line of defense. That way, if something happens, world goes to crap, markets start to tank, at least you know you'll be stopped out of what you wanted to be stopped out at. Don't let your positions run wild if you can't sit there and watch them. So again, I'm in favor of hard stops, especially if you're a newer trader or you're just not in front of the computer a lot. And I use them all the time. Like I said, 90% of the time. I recommend you do the same. It helps my trading easily. Don't worry about market makers and don't worry about the stock bouncing after it stops you out. If it happens, I'll tell you right now, get over it. Get back in the trade when it sets back up or move on. All right, everyone. Hope that helps you with hard stops.